Hey everybody, Brian from Bearable Traders here. It is the weekend, July the 10th, and of course this is the weekend video. We'll take a look at what happened last week and look ahead. Earnings season kicking off later in the week, so it should be an interesting week. So let's get down to it. And let's start out with the week in review, shortened trading week of the 4th. Markets, they continue to find some support around this level this week. Jobs report came out on Friday, much stronger than expected. We had a pretty choppy Friday, down and up and down. Traders and investors trying to figure out if a strong labor market means soft landing, no recession. It's hard to have a recession if you've got a very strong labor market. So still jury out on that and whether the Fed can stick this soft landing that they want to do on this pullback. Dow, the Qs finished off the highest on the week. Technology performing pretty well there. SPY up a bit as well, heavy weighting in technology. And areas of strength and weakness, you can see here, basic materials and energy were the ones that finished most in the red. Energy still under pressure there. Consumer discretionary, healthcare, and tech, a bit of a mix of risk on and risk off assets there, but they were the greenest on the week. The 10-year Treasury rose back up again. Again, we're over 3%. And the 2-year was actually higher at 3.1. And so we kind of see we flipped on the interest rates. So shorter term interest rate higher than long. It's called an inverted yield curve and often is a sign that recession is coming, but not always. We'll see if it stays that way or if we get a correction back to a more regular yield curve as the weeks progress here. So, and of course, with the rising interest rates, dollar was up a bit as well. It ended up almost 2% on the week, so it continues to show some strength there. And Bitcoin has bounced back, so there you go, just up and down around that 20,000 level. And before we get looking at some charts here, just a quick ad for my new book on Amazon. It's there and available, Profiting as an Active Trader, Routines and Strategies of an Active Stock and Options Trader. So it's some of the strategies I use. If you haven't checked it out yet, there it is for the taking. Okay, so now let's get into some charts here. Start by looking at the treasuries. You can see here the 2-year's up at 3.12. After these couple weeks of pullback, we were really getting quite extended and needed a little bit of a breather there. So we did move back up this week. Again, Friday signs of still a strong labor market, which means Fed will be inclined to continue to raise interest rates. The 10-year also up, same sort of comments in terms of this 3 weeks of pullbacks. And now we're turning back up again. But you can see here 3.09, this is lower than the 2-year. That's called when the yield curve inverts. In other words, the shorter term yields are higher than the longer term yields, which is always a bit of a concern. People say that's a sort of a sign of a coming recession, but I think we need to see this stay this way for a while. And it's not always a sign. It's just, an indicator, if you want to call it that a possible concern about maybe a coming bit of a recessionary environment. On the transports, again, we had a pretty choppy week, or pretty choppy Friday, I should say, after that jobs report came out. You can see transports off a little bit on the week, volume pretty light on a Friday. Starting into the summer, volume will drop off a little bit. On the week overall, you can see here we're pretty much chopping sideways in a range here, waiting for probably some news on some of the earnings that are going to be coming out here shortly as we start into earnings season again. And the Dow, again, this on a week, really just kind of flat on the week there, or on the daily, I should say. You can see here, and then on a week, we had a pretty decent week overall. All the momentum indicators continue to look like we're going to go higher. Again, volume pretty light. The Dow, again, continuing to hold here, but we're still sort of tracking below this trend line. But stochastics turning up, and I think we could probably start to move higher here. The Qs, again, not a bad day on Friday, actually. We started sort of down on the day after that jobs report. came down, and then we came back up and actually finished up on the day on the Qs. Technology been the stronger sector, and it was stronger on the week as well. You can see here we're up 4.7% here on the week almost, and really, again, we're just sort of chopping in this range, but still below these this longer term trend line. But if we drew another line here, it looks like we are kind of trying to break out of a sort of shorter term trend. Volume on the week, a little bit on the light side compared to the previous week, and light overall. But again, we are getting into summer. Summer we do tend to see less trading. And the SPY, again, well off the lows of the session. Couldn't manage a gain on the day, but not a bad showing. Again, on the week, we just seem to be chopping sideways, maybe trying to break out of this downtrending line here. The IWM, again, well below this longer term trend line, but we are trying to break out here. If you do draw a shorter term trend, I'll just show you here. Let's do this quickly. We have broken out of that that shorter term trend line. So you can see here we've this was connecting these 3 points, and then now we're breaking out a little bit here. So again, IWM looking like we're putting in a bit of a bottom here, kind of an inverted head and shoulders. IWM on the week, pretty decent performance. Again, volume very light, so not a lot of institutional participation. You can see stochastics are starting to turn back up here. So I think overall the markets are looking like they want to trend higher. And here's another indicator that maybe we're going higher. This VIX, which has basically lost this upward sloping trend line from the bottom. We've broken down through there, and we're coming down to the 200-day. So as the fear index goes, fear of people reaching for options to use as protection, there's not a lot of that going on, and so volatility is really coming out of the market here. So again, sort of an indicator that maybe nobody's really worried about downside, and probably a harbinger that maybe we may go higher. The US dollar, again, sort of because Europe is in pretty rough shape energy-wise, and other, and German economy really starting to slow down again, related to energy concerns due to the Ukraine-Russian war. You can see here the dollar is just super strong, and just chopping here for the last 3 days after this massive gap up here. So again, I would expect this to continue. Dollar is going to be strong, just because because euro is having so much problems right now. And here we are back, Bitcoin right now trading below 20,000, just barely. So you can see here we've had a bit of a sell-off Sunday, and we are trying to just sort of consolidate in a bit of a range here by the looks of it right now on the Bitcoin. So a couple of stocks to watch as we go into the new trading week here. Apple continues to perform pretty well after this drop back down to 135 area. Sort of 150 would be an area which will be probably some resistance. As you can see here, we bottomed here at 150, topped out here around 150. So I suspect we are going to go back to 150 on Apple. Technology continues to look like the best ship in the fleet. Amazon, again, I didn't get a chance to buy any, sell any puts here. I was going to sell 100 puts early in the week. I didn't get a chance to, and then it kind of got away from me, so unfortunately. But that was, again, Amazon looking pretty strong. Again, if we can break out of this sort of 117 area, we can probably get back up to 125. Again, Amazon looking pretty good here, and the tech sector, just generally speaking, technology looks like a good bet. Alibaba is sort of hanging around here. It again, this 125 level is an area that seems to be having trouble getting out of, but certainly volume starting to build on Alibaba, and we'll see if it continues to push higher. Again, still concerns. They still seem to be seeing pockets of this coronavirus and then deciding to lock places down. So that's always a concern there. CHPT, it didn't close out below 12, which was an area I was concerned about. So it came right back up, and I'm still holding on to that. Again, looking for a retest of 16 there. IBM, just kind of watching. It's still trending upwards at this 143, 144 level. If we can break out of that, probably have another leg higher. Cisco, I do like to trade this one around, but it seems to be kind of stalling out here, and I guess we're just going to wait to see what happens with earnings. A lot of these companies are going to be reporting earnings. USO, the dollar or the oil fund, you can see here we had a big drop and came back down, but it kind of bounced back up here after hitting this level of support and bouncing back on this doji candle Wednesday, or I guess, yeah, that would have been that would be Tuesday actually, because that would be Wednesday, or no, that's Wednesday, sorry. Anyway, yeah, energy does look like it's making a bit of a comeback here, but again, we're in a downtrend on energy, so until that trend line is broken. XLE, again, we're in a pretty serious downtrend here. We are testing this trending line here, and we'll see if we can break out from this level after this check back. Again, technology seems to be the best performer, and I think it will be going forward. XLK is a way to play that. That's just ETF if you don't want to get into any individual stocks. The XLV is something I have now. Healthcare, I think healthcare looks pretty good here. We did have a big run up on Friday, but we're well off the highs of the day, still trying to get through this 200-day moving average, but liking XLV, and I have a position in it right now from earlier in the week. And that's about it. So there you go. Let's wrap it up here. July 11th, week ahead. Earnings season starting, and here's your levels on the different indexes to keep an eye on. Economic events Wednesday, we've got the CPI number that does come out. Of course, that'll be interesting to see how that reading looks compared to the previous one, seeing if we're getting a bit of a cooling on inflation and price increases. It's not really an economic event, but Friday, Elon announced that he was going to be bailing on the Twitter deal because he didn't like what they were offering him in terms of information. So we'll see how that plays out, but that's going to be months and months in the court system, no doubt, because Twitter has accepted his offer, and it was somewhat unconditional. So I'm not sure how he's going to weasel his way out of that. But anyway, we'll see what happens there. That'll make for an interesting trade Monday morning. And of course, as we've been talking about, earnings season coming up this week, starting later in the week with Pepsi on Tuesday, Wednesday, DAL, Delta Airlines. So we get a couple of those, and then we get into the banks later in the week. So and TSM, as well as UNH Healthcare. So should be an interesting week overall, but watch for some sort of choppy action until we get into earnings season, and then we'll just be seeing what the guidance is on from the various CEOs and CFOs, and that will probably dictate in some way maybe a market direction going forward here. So have a good weekend, or rest of the weekend, everybody, and we will see you tomorrow in the room, 8 o'clock. Start out with a pre-market show live on YouTube, and then 8:30 or 9:30 trading the market open if you're a member with us. So we'll see you all hopefully Monday morning. Bye for now.